Hello everyone and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Friday the 7th of June. It's Payrolls Friday and what we have is a broad market consolidation really, nothing too significant, a little bit of dollar strength that you've seen, also risk positive vibe in the market, nothing too decisive though, because what you tend to see in front of payrolls is markets fairly much in consolidation mode, but you can see this risk positive mood coming through equities which have bounced. You've also seen the oil price, which has started to take a little bit of support, started to rebound a little bit on WTI and Brent crude. And that's coming as, broadly speaking, equities, as I said, are higher. Wall Street strong overnight. And you've seen suggestions that that perhaps the discussions between Mexico and the US could result in a delay to the tariffs that the US could impose. And subsequently, that is a marginal risk positive move, although you would argue that the general mood around tariffs and the trade disputes that the US is picking throughout the world really is not great. So subsequently, is this going to be a move that lasts? Is it going to be a move that just starts to dissipate again? That would be the question. But the impact on US monetary policy outlook, certainly given the deterioration in the trade outlook in recent days and weeks, has certainly led to the dollar correcting back, but that dollar correction has started to find a bit of support in recent days. You've had John Williams, the Fed FOMC voting member, a little bit of a hawk on the committee, but he was still not really moving towards a rate cut quite yet, even though he notable of the deterioration in outlook from the trade dispute, but still not really edging towards a rate cut quite yet. And that's again helped to steady the dollar a little bit, with yields starting to also find a bit of a low potentially. And interesting that. So that all comes ahead of payrolls report, which is this afternoon. Now, payrolls Friday. We're looking out for headline payrolls of 185,000, unemployment of 3.6, and average hourly earnings of 3.2. Now, show you how that looks on the figures in terms of 185 compared to 263 from last month on the headline. Interesting that ADP employment report came in at 27,000 on Wednesday. So is there a potential downside surprise in order? We're also looking out for the unemployment rate steady at 3.6%, and average earnings, average hourly earnings also steady at 3.2%. So there's likely to be some volatility, and the implications for monetary policy read into this report, so that could drive a bit of movement on these forex markets and also equity markets as well. So watch out for that this afternoon. I've got a payrolls webinar this afternoon that you can sign up to on our website. So that takes me to my chart of the day, which is the German DAX. Now, what we've had in the last few days is the equity markets rallying. You saw that on the S&P 500, but the DAX has been a little bit mixed in the last couple of sessions, and it comes as this market rallies towards the confluence of this downtrend and also the old the old resistance at 12,125. So this is an important point for the for the DAX. Because you've got this sort of 50 pip range really between 1277, which was yesterday's high, to 12,125, and that is resistance. So how does this impact on the overall market? Well, this is a key crossroads seemingly, because you've got the RSI around 50, MACD lines. Are they about to bull cross? Stochastics are at a level at which they rolled over back in May. So it does seem as though this is a bit of a crossroads moment for the DAX. You've seen other equity markets which are rallying through their equivalent downtrends. So it's, as I said, a crossroads, but if it follows other markets higher, then it would be certainly breaking that downtrend. But it is certainly a level at 12,125 that you need to see the DAX closing above to really suggest there is confirmation of that improvement in the outlook there, whereby it's something more than just another rebound within this downtrend phase. So it is an important moment, I think, for the DAX, and perhaps payrolls report today could be that clincher. So with that in mind, you've got the support of yesterday's low at 11,900. Let me show you the hourly chart. And 11,845 was that old neckline of the Head and Shoulders top pattern, which effectively is still in play. So the market needs to break this downtrend to start to suggest that this is a recovery that we can back. But for now, it is still a rally within a downtrend. So I wish you good luck in your trading today, and I'll speak to you later.